Hey everyone, welcome back to the channel. So if you've been thinking about buying your first home, but you're not really understanding how much you can actually afford, well then this episode is just for you. So I'll go through a mortgage affordability calculator, determine your affordability rates, which includes your income, your expenses, and the calculations to make that decision. At the same time, I'll also explain what the stress test is and how that gets applied into calculation. So if you're ready, let's jump right in. When we talk about affording a home, we're not just talking about what a bank tells you in terms of what you qualify for. We're talking about what fits your lifestyle and long-term financial goals. Just because a lender approves you for 700,000, it doesn't necessarily mean that you should be borrowing this maximum amount. Because affordability is about your monthly comfort and long-term stability. So let's talk about how lenders decide how much home you can afford. They mainly look at four key criteria. First is your income, which is your gross monthly income before taxes. Second, they look at your debts, such as your car loans, student loans, and credit cards, just to name a few. Third is your credit score. And the higher your score, the better rates and options that become available for you. And finally is a down payment. And the more down payment you provide, the more purchasing power that you have. Now, lenders use something that's called a GDS and TDS ratio to make these calculations. GDS stands for gross debt service, and this is a percentage of your income that goes towards your housing costs. This includes your mortgage, taxes, heat, and condo fees. And ideally, this shouldn't be any more than 39% of your gross income. TDS stands for total debt service, which this includes all of your monthly debt obligations. And this should not be any more than 44% of your gross income. Let's say as an example, you make $6,000 a month before tax. Your GDS limit would then be around $2,340 a month, and your TDS limit would be around $2,640 a month. Now here's a critical piece, mortgage stress test. Because even if you qualify for a certain mortgage based on your current rate, the government wants to make sure that you could still handle your payments if there were ever increases in the interest rates. So to qualify for your loan, they will use either 5.25% or the rate that was offered by your lender plus 2% on top, whichever is higher. So if the lender is offering you a mortgage at 5.4%, you actually need to qualify as if the rates were 7.4%. And this ensures that you're not being financially stretched if interest rates rise in the future. And it reduces the risks for both you and the lender. So now I'm going to switch over to this mortgage calculator example where I'm going to go in detail and in depth about this affordability scenario. Okay, so now we're going to go through this mortgage calculator tool here, and let's just put this down as an example. We have person A making $6,000 a month, and person B, or a spouse, who's making $3,000 a month. So that's a total of $9,000 they're making monthly as gross income, or annually they make $108,000. If we look at the mortgage amortization, roughly 25 years, and let's say they were able to get interest rate. So if we look at today's rate, if we get a 5-year fixed, 4%, let's just say they'll get 4% as an interest rate, but we'll add the 2% on top to account for the stress test. Okay. And next, we're going to look at the property taxes. So as an example, I have a listing here, the Monroe building in Mississauga. This one has a property tax of $2,546 and has a maintenance fee of $728. So for the first property tax, so that's roughly around $212 a month property tax. And then for the monthly condo fee, we're looking at around 50% of that is $365 a month. And this unit actually has the heating included maintenance fee, so we'll leave that blank. So in total, your maximum mortgage payment after cost will be $2,123. And we'll look at the GDS ratio being 39 and 44 based on what I explained in my last segment there in terms of the ratios they use to calculate. So what this means is, so as a percentage of your income, this is the maximum amount that your gross debt service should be, 3,510, while your total debt service shouldn't be any more than 3,960. So because we're going to put 10% down, we're looking at the loan amount as being 90% of your mortgage. That's 2% of the premium that gets applied for your mortgage insurance. So we'll put 2% right here. So let's say we put a down payment of $50,000. That is roughly 10% of your purchase. And now we'll check to see if we qualify. So we get qualified for just about $500,000 based on these parameters. But important thing to note is this is at the stress test rate. So if we bring that back down to 4%, what ends up happening is you can actually afford a little bit more, but for the purposes of doing the stress test, we need to qualify for 6. Also, one big thing I wanted to mention is this affordability calculator I use is really just for reference, as there's other details that mortgage lender will take into consideration. And so it's best to sit down with a mortgage broker who will break down the specific details on your qualification process. Not only is your mortgage the only cost, you also have to budget for your closing costs, which is typically within the range of 1.5% to 4% of your purchase price. This is for your land transfer taxes, your home insurance, your utilities and maintenance as well. So always keep a buffer in your budget so that you don't spend every last one of your dollars on a down payment and then be stuck when you need to buy a new appliance. So my final tips before I wrap up: make sure you get pre-approved before you shop. Don't borrow the maximum that you're approved for. And factor in lifestyle expenses for your traveling, hobbies, and your family plans as life still goes on. Make sure you work with a real estate professional who understands your goals. So how much home can you afford? Well, it depends on your income, your debts, how you qualify under the stress test, and how comfortable you want to live. It's not just what the bank says. So if you found this helpful, hit that like button, subscribe for more real estate tips, and drop your questions in the comments below. Thanks for watching, and I'll see you in the next video.